The government's personal income tax plan, which was announced in the 2018-2019 budget, has now passed in Parliament. This will be the second major tax cut that our government has introduced in the last 2 years. So what does this mean for you? And how does it affect you? Let's find out. Welcome back to my channel. My name is Reese. In today's video, we are discussing the personal income tax plan introduced by the Australian government and how it may affect or increase your tax return. This plan, which was introduced by our government, is supposed to provide Australian taxpayers tax relief, which is being rolled out over a number of years in 3 different stages. And at the time of recording this video, we are still in stage 1. For any Australian earning between $21,000 and $126,000 a year, they will receive a tax relief stimulus in the following tiers. If you earn between $25,000 and $40,000, you will get back $255. If you earn between $40,000 and $60,000, you will get back $580. If you earn between $60,000 and $90,000, you will get back $1,080. If you earn between $90,000 and $120,000, you will get back $1,215, which is the highest amount in this group. And if you earn over $120,000, you will only get back $315. Now, this tax plan began back in 2018, and it is intended to continue on all the way through to 2026. In 2022, we will enter stage 2. That's when stage 2 kicks in. Now, this may be a little bit backwards, but stage 2 is intended to benefit more wealthier Australians, seeing them paying less tax over the course of the stage. I believe the intention behind this is because the more wealthier Australians missed out on the tax relief in the earlier stage. Now, I might not agree with it fully, but it is part of the plan and I'm here to provide that information to you. So as part of stage 2, the more money you make, the greater relief you will get. When this stage kicks in, people earning $120,000 or more will find themselves being about $3,000 better off each year. So 2 years further down the track from 2022, we move into stage 3, and this is the most controversial stage. This is where things start getting pretty hectic. To begin with, one whole tax threshold is going to be removed from our taxation system, and the tax rate for another threshold will be cut, meaning you will pay less tax for every dollar you earn as you earn more money. So firstly, the tax threshold between $90,000 and $180,000 a year is being abolished. So if you earn in that category, that is no longer a threshold category anymore. What is happening is they are increasing a tax threshold from $45,000 all the way up to $200,000, and they're making it taxed at the same rate. Meaning if you earn $200,000 a year, or you earn $45,000 a year, you will pay the same amount of money on every dollar you earn, regardless of if you're earning $200,000 or not. You will now pay 32 cents on the dollar all the way up to that $200,000 mark. I'm sure how you can see this is going to favor high earners big time, because this delivers massive tax cuts for those earning close to $200,000 a year. As an example, just doing some quick maths, someone earning in the realm of $180,000 a year are going to see themselves being roughly $10,000 a year more better off. You do the math, $10,000 a year for 10 years, they're going to be $100,000 better off not having to pay that to tax. That's just money in their pocket. Can't really complain about it if you are a high earner. So here's where it gets interesting. This is also going to provide massive tax benefits to those in lower income streams moving and edging into these higher income streams, because now they won't be paying as much tax on the promotions that they're getting, on the increase in their salaries that they're getting. It should mean that they have a little bit of extra money in their pockets to potentially put towards something that they may have been putting off. The downside to this is that higher income earners, it's not really going to make a difference to them. If you're already clearing $140,000 in a year, what's an extra $10,000? When you get to that level of earnings, living is sustainable, and it's sustainable on a level that's just silly. You can buy what you want, you can do what you want, and it doesn't really affect your finances too much. Realistically, that little bump in the money that they don't have to pay in tax should just be absorbed into their lifestyle and not really make any impactful changes. Whereas for the lower income earners, having this tax relief will absolutely be beneficial to them. To receive these tax benefits, there's not really anything you have to do when lodging your tax return. The new offset amounts are already being factored in, even if you've submitted your tax return. It's part of the plan. It's automatic, and you probably won't see it unless you're aware of it, which hopefully now you are. Regardless of what tax bracket you're in, this is something to look forward to. It's tax relief at the very minimum. You're going to have more money in your pocket at the end of the day because you'll be paying less tax to the government. And now as your salary increases, this is something to look forward to again because you will be paying even less tax based on the money you're earning. As always, I hope you learned something in today's video. This is an important topic to understand because it can see you earning a little bit extra back on your tax return each year, especially as your salary increases. If you did enjoy the video, please consider liking and subscribing, and I will see you in the next one.